What is term life insurance? A term policy provides coverage for the insured's lifetime, and it can be purchased at any age. The premium payments are usually made annually or monthly. A typical term plan has an initial cash value equal to your annual premiums plus interest. This means that if you die before paying off the full cost of the policy, the remaining balance will go toward funding future benefits. How term life insurance works. A typical term life insurance policy has two parts: an initial premium paid at purchase, and additional premiums paid over time until the end of the term. The first part of this equation determines how much money will be available to pay out upon your death. This amount is called the death benefit. If you die before the expiration date of the policy, then the remaining portion of the premium payments becomes due immediately. What is whole life insurance? Whole life is the most well-known and simplest form of permanent life insurance, which covers you until you die. A whole life insurance policy pays out over many decades after you've died. You get monthly premiums and build up a cash-like account with interest. When you pass away, your beneficiary gets all the money inside this account, plus whatever was left in the policy. This means you never run out of money even though you may live past 100. The main advantage of whole life insurance is that it builds wealth over time. As long as you keep making regular contributions, you won't ever go broke. What's the difference between term and whole life? The main differences are as follows. 1. The cost of whole life policies tends to be higher than those of term plans. This is due to the fact that they have lower rates on their premiums over time. Who should get term life insurance? Permanent life insurance, which lasts for the rest of your life and comes with a cash value. Term life is easy to manage and cost-effective. If you die before the term ends, your beneficiary death benefits a tax-free lump sum of money that can be used for funeral costs, to pay bills, or for any other purpose. Terms usually last from 10 to 30 years and you pay a monthly or annual premium, which is determined using your policy details and your health and demographic information to keep the policy active. If you're looking for simple, inexpensive life insurance, then a term policy may be just what you need. You'll have peace of mind knowing that your family has enough time to adjust after losing their breadwinner. And since terms typically last only 10 to 30 years, they won't become too expensive to maintain.